You have an idea and in search of funding, how to raise funding, what are those steps to get funding or to approach an investor. Like such lot more curious questions to be answered today in this episode. And hi everyone, I am Amit. I welcome you all to the From the Scratch podcast series powered by monkdigital.in. Among us today, we have an investor. Yes. And we are going to grab, or I would say, get inside his brain and steal all the important information. So, our very special guest today, Aditya Arora, from being an intern to the CEO of Fard Network. He is an investor and a speaker. Young nominee at Padma Shri 2020 under Entrepreneurship Mindset Curriculum, Government of Delhi. Awarded as a Young Entrepreneur National Entrepreneurship Day 2017, and the list keep going on. But without any delay, introducing the man himself, Mr. Aditya Arora. Hi Aditya, how are you doing?
Yeah, hi Amit. Hello everyone. Thanks for joining in. And great to be here, Amit. Finally we connect and we're doing this.
Yeah,
Happy, excited to be here.
exactly. So, in brief, could you tell who is Aditya Arora?
Alright. So and that's the toughest question, right? Anyone can ask you that define yourself who you really are. What when people start reading your list of achievements and start saying that this is you. This is not this is never your achievements don't end up defining you, right? So I don't believe that, of course, work or anything defines me. But Aditya is just someone one from the crowd, right? He's not someone who's come out with a silver spoon in his hand or with a godfather. He's someone who's come from the community. He's one of you, right? You look into a crowd and look at any person. That is Aditya, right? So yes, but the only thing that I think that I've done right in my career is follow my passion, right? Wherein I'm not given to all the criticisms, all the struggle that I was enduring all this while. And it just kept going on, right? I did not take age as a number, right? Oh, sorry, I did not take age as an age. I took age as just a number to grow, to learn, and to continue. So yeah, that is someone in another Arora. So, yeah.
That's good. That's a very, uh, that's the good gratitude. You are so humble, but people don't know your background. If they know, they would be really shocked by seeing your introduction. That's really good. So, Aditya, like, in a very simple way, what is funding and why? Sorry, why funding? Why funding?
See, Amit, there are multiple ways of running an enterprise, right? You can raise debt and you can continue and go ahead. You can invest whatever profits you are making and invest that back into the company and then go ahead. But the scenario where funding comes is when you have to rapidly grow aggressively. Okay, you have to grow very big, you have to become very large in no amounts of time. And that is where venture capital money and institutional capital is being raised. So let's say you are a startup and you are going good right now, as in you're doing good business, you're doing good, hitting good numbers. You need to you need to multiply it by 4 times, right? And that's where funding comes in, where it gives you that push, it gives you that capital to spend at all these other places and hire rapidly, invest in product rapidly, so everything happens rapidly. So it's basically kind of a growth hack, wherein whatever you were achieving, let's say 5 years down the line, you're trying to achieve it now within 2 years, right? And that's where funding comes in. And the second thing is, why funding? Because uh, when you're running an enterprise, you are just having limited brains, right? You're having one person, either you are running it or you are having a team to run it alongside you. But when you take funding, not only you're taking capital, but you're also inviting a lot of other business partners to join into your enterprise, right? And that's where these partners come in, where they can add knowledge, they can add good value in terms of growing the business ahead, and they can also bring in those connections, those network, so that they can generate more business, right? So that's where in this entire scenario funding comes in. To A is to accelerate that growth, to invest heavily in other verticals, and B is majorly to invite other partners and to invite other stakeholders as well into the fold, so that they can add value from their own standpoint. So that's why funding is required.
Getting. Nice. So it's like it will help us to accelerate as well as to scale also. That's a good thing.
Absolutely.
So, what are the different types of funding?
So there are various types of funding which you can raise. Of course, one is your, as I said, your debt capital, right? Wherein you go to players, micromanaging players, and take small amount of working capital loans or small amount of debt from them. That's one way. Of course, in debt, as you know, you have to repay the principal amount along with some interest, right? So that is there. So no one is right now coming into your whole fold as a partner, right? They're just providing capital, they're just taking the return of it and exiting.
Yeah.
The second way is called equity fundraising. Like this is the most preferred form of fundraising. What equity does is that you're also raising capital here, but you're giving, you're not paying them back. You don't have a liability to pay them back. You are just giving them equity shares against it, and whatever returns the company makes out of it, right? Whatever is left after company has paid to all the people, other people as well into the company, equity shareholders get the remaining portion of that, get the residue of that. So this is called equity funding. Then there is of course, but this sort of funding, equity funding, Amit, is a very blind funding, right? You don't know whether the company will pick off or not. The company can fail as well, right? There are higher chances of failure than they are of success. So this is a very high risk, high return funding. Okay. The third kind of funding is a very stable option of funding. It's a structuring. So what we do is, this is also equity, but what I do is, this is called revenue based funding. What, let's say you hit certain amounts of revenue, I will put in these many funds into you. You hit certain amount of revenue, again I will put in these many funds into you. So like this, we create blocks and we shed equity on a block basis, right? So equity goes block by block to the investing partner, right? This is the third, revenue based financing, right? Fourth, of course, is called venture debt. The last form of funding that we typically see are convertibles. So what it happens is that it is also like debt. Let's say I'm raising a debt from you right now. I go to Amit and say, Amit, give me 500 rupees. Now Amit will tell you, Amit tells to me that, Aditya, you are taking a loan from me for 2 months. So let's say, even if at a 2% interest rate, your loan amount would be somewhere around how much? 20 rupees. So pay me 520 after 2 months. But I say to Amit, Amit, let me not give you capital. Let me give you equity against 520 rupees whenever we raise the next round of funding, right? So let's say I raise my next round of funding, whatever value we create on a valuation, 520 rupees of Amit gets converted into some equity shares, right? So this is how we typically, this is called convertible level funding, wherein you convert from debt to equity. Okay, from a debt to an equity. That's how this also funding class like this. So various types of funding, but these are the four most common that we talked about. One was, of course, debt. Second was convertibles into equities or debts. Third was equity based funding. Fourth was revenue based funding. So yeah, these are the common types.
Nice. I got a lot more awareness about these funding rounds. So yeah, I hope so. This may be useful for me as well as for the audience who are listening to this. So, how do you see the fundraising in the future? The methods and the processes.
Uh, See, for funding, now investors have also become wise. India is a growing market for funding. Okay, angel investors were not there so much in India, and angel investing was not so much. Venture capital money was not there so much in India 5 or 6 years back. But it is not the case now. Right now, we have about 1,200, 1,300 odd investors who invest into startups. Right. Then we have about 100 plus venture capital firms in India which are registered with the government. So in terms of progress and development, there has been a lot as in Indian market is growing. So of course investors are becoming wise as well. Now they know which startups to put funding into and which to not. They are taking wiser decisions. They are asking other people because there's a community which is building around, right? So of course, I see the market maturing that ways. Secondly, is funding has become a quick hack, right? If anyone is facing trouble, they go for funding and they raise that, they solve that problem, right? So I see that happening a lot because in India, to scale any business, it's very difficult, right?
True.
The laws that are there in government, the market that is there, customers, the competition, everything is very different in India. So of course, for funding, it's like a funding war as well between companies, right? That who raises more amount of funding at the end of the day. So I see that happening as well in terms of a lot of startups gaining traction, because India is also having a lot of startups which are coming in. So lots of startups raising capital, lots of investors which are coming there as well. So all in all, I see that going in a positive direction. And yes, I see companies at a very early stage raising capital a lot more quicker and uh, a lot more in terms of volume. So yeah, that's how I see the market maturing. Yeah.
Okay, okay. So I do get few messages on funding, like I just have an idea, or I have an idea, they don't have anything. Is they have an idea? So how to get funding? I guess you get even lot more because you are into this sector. So like having an idea, how to get funding and all those things. But the thing here is, after getting an answer, for example, if they asked you maybe, or if they asked me also, how to get funding and all, if they give them the answer also, they won't take any action. It's like they're now satisfied. Okay, they got the answer, that's it. So what do you like to say to them?
This is
I
a
don't know, maybe ask.
problem that I also face. Yeah. I get almost about 380 messages, 380, 400 messages in a month,
Oh,
wherein people are asking me just about how to raise capital. People are asking me to, of course, evaluate them and raise capital because this is what I do on a daily basis. I put in money for companies and I have angel investors who invest on what I tell, right? So yes, I've also faced that problem. But one thing that you have to realize is, and this is for all the viewers who are listening there who message me and Amit, and saving both of our lives, that please do hear this, right? That idea is something that is not something that which is very valuable, right? Because ideas are like they're saying ideas are like guitar. Every college kid has one. So, of course, you need to focus on the execution of that idea. That's very much important. Everyone's idea is best in their own minds, but ideas are not ideas anyone can copy, right? Ideas are not patentable, but your execution of that day is what matters. So investors, when they look at fundraising, idea stage funding becomes very, very early for them because there is nothing that they can put money on, right? There is no conviction there. So best stage is to first, of course, if you have an idea, to explore more on that idea, to try and raise capital from friends, from family, go to incubators which are there in the country, go to accelerators. And then once you've done that, you've had early traction. That's when it makes sense to go to angel investors and ask for angel money from them. So that is where it makes more sense. If you are just randomly texting with an idea, you won't get response from I believe 100% of the investors. No investors would respond to you, right? Because they get so many ideas like these every day, right?
exactly.
So what you have to understand is how do you differentiate yourself from the crowd, and your performance, how you are there in the market, how you are creating a difference. That's what separates you from the rest of the ideas that are out there.
Exactly. And at least execute an idea on a little smaller people, like of your larger audience, pick a small piece of them, try to execute there. You may get few numbers, do not a revenue, but a numbers. Then if you get, try to pitch to investor, maybe to you also, you may respond instead of just saying, I have an idea on those stuffs. That's a good thing. So like Aditya, if a common person, how can he become an investor?
Okay. Uh, so I'll share my story as in I'm also the most common person that is out there in the market. I come from a very middle class background, and angel investing is something which has just recently, as I said, become a fad. It's not like your mutual funds or your stocks where you have so many people who are giving you advices and tips and giving you calls. Angel investing is something which is just one of the most toughest forms of investing, I believe,
Mm.
because in stocks you still have a history to look at what these companies have done,
Yeah,
right? If you're doing in mutual funds, you still get to see the past performance of the funds. You still get to see everything. But when you are investing in a startup, we're talking about a company which has just recently started. It's just been a year, and we don't know whether that company will survive or not. Let about performance. We just when we are investing money, we care about whether this company would survive 2 or 3 years or not, right? So it's the most toughest. But how you can start is, of course, it doesn't happen overnight. That let's say you get funds and you start investing in companies. What you have to do is first, of course, uh, attend all the events that you can in terms of startups. Right? That's how I started. Every event that I found in terms of startup funding, I attended that. I did not think that what value can it add to me, or I did not think if it can add any value to me or not, right? Because everything adds value at the end of the day, even if it's not adding a value, right? That's the best value it can add. So that is one thing which I started. That hustle has to be there. Second thing is that you need to have clarity and vision, right? You need to focus on your pickup areas. Investing is about investing in sectors. Now, there's so many sectors out there. There's gaming, there is sports, there is finance, there's technology, there is FMCG, there's consumer brands, pharma. So many sectors we can talk about, right? But what you have to do is you have to pick up the sectors in which lies in your area of interest. Read reports on that sector, talk to people. The one thing that we don't do right is we don't talk to people within that sector, right? Talk to people who are out there, who are building startups, who are investors themselves. Talk to them, understand their thesis, understand their philosophy, their thought process behind putting a capital or putting a check, right? And that's where you, of course, try and become more sane and wise in terms of your decisions. Once you have done all of that, you keep growing. This is an evolutionary process, right? You keep evolving that, you keep learning, you keep going to events, you keep repeating that. The second thing you have to do is, of course, start with an investment. One thing that people go wrong in India is that they do like this, they do investment like a course, right? They study the notes, they study the resources, they ask your friends, they do everything. But the thing that they don't do, the thing which matters the most is investing, right? They don't put capital. And that's how you'll get to know when you put capital in enterprises. That's where you learn when your investments fail. That's when you learn when your investments grow as well. And that's where you become much more risk taking. You become much more knowledgeable, sane, and wise, much more practical in your approach. So yeah, that's about it. And keep a healthy community. The last thing I would like to say is keep a healthy community of investors around you. Build that network, right? In terms of people who are investing in enterprises. Not only will they share opportunities with you, but they'll also share their thought processes, their philosophy behind backing investment, which is also very crucial, because most of the times the other's philosophy as well matters to a very good extent in terms of what's the rationale behind investing in one particular startup. And that's where you get to know from a different mindset, from a different perspective. And that always helps in investing. Investing is never a solo job. It's a very holistic kind of an experience where you study all the aspects and you invest. So that's how you should try and become angel investor. And that's the journey that I have been through as well myself. So yeah.
Crazy, to the point, transparent. That's great. Yeah, that felt very natural. And yeah, it's like investment for any common people. It's like an arranged marriage, I think. So yeah. So like, which is your best investment till this day?
So, uh, as in, I've been not very old in terms of investments. I started in 2017. I'm still very young, so I started way back in 2017. Um, from 2017 to 2019, we did in about 5 companies, and then after that, in lockdown itself, we did about 20, 21 companies in 7 months. So for me, it's about 25 companies odd. And these are very recent investments, as in 75% of my of the investments have been just in lockdown. So it will take time, of course, to show results, because in India, any investments takes about 3 to 5 years at least to show that results which you are expecting to give you that return on capital. So of course with that. But one investment that I liked was the first company that we invested in was a company called Clear Deco. So Clear Deco is what it does is it's a budget eyewear retail brand. So let's say Lenskart is also selling eyeglasses. Lenskart is selling eyeglasses for 1400, 1300, 1400, 1500 bucks. Clear Deco, what it does, it sells you eyeglasses for 700 rupees, right? And this is for mass market. So Lenskart, you will find it in malls, in metro places, in lavish areas. But Clear Deco stores, you'll find it in Kota, you'll find it in Madhya Pradesh, you'll find it in all the Jaipur and all these places where, of course, tier 2 and tier 3 towns, where people don't have access to quality eye care at affordable prices. So yeah, that's where Clear Deco is one of my personal investments, because Amit, it's not just about revenue. That company has grown from when we invested in, we had it had just one store. Right now, it has about 79 stores across the country. So not just in terms of financial investment, from a financial standpoint, it has done very well. but in also in terms of the impact, right? Because it's providing sort of the vision. It's providing an eye vision to people who can't afford quality eyeglasses, right? And its mission is to impact about 1 billion lives. So they're already there on their mission. And yeah, that's what I love about investing, that it also gives you an opportunity to change the world for better.
That's nice. And actually, I have spoken to Shivi Singh also. So actually, we are into franchisees. Actually, like we run a proper business. I run a digital branding company, and actually, my father is into he. Apart from that, he invests in real estate, into stock market. But as me, something franchisee, he don't trust franchisee as a thing and all. So we have somewhere around good jockey stores and all. But recently, we have been spoken with Shivi Singh, I guess, in this lockdown itself, regarding Clear Deco franchisee. So still in talk with them to open. Actually, recently I am from Hyderabad, so they have recently opened up in Hyderabad also. So as they were planning of putting up somewhere around 100 stores in this 2020, but it could not due to COVID. But yes, they have, as you told, 1 billion eyes. So their target, their it's proper, as you told, it's that's their mission, and they are really working on that. Yeah. So my next question is very on the thing that if a business owner like me, or any business owner, budding entrepreneur, or someone, anyone who is a business owner who's running his business, but where can he invest? Like, which is the best investment option to invest in? Like stock is there,
Mm.
franchise is there, and all more other things. Yeah.
Uh, See, a lot of time it depends on your appetite as well,
Mhm.
right? Every instrument, if you look at, has their own risk profile, has their own characteristics of investment, right? And it depends. If you're investing in the longer term, right, then I would suggest, of course, go for these long-term mutual funds, go for PPFs, go for all these postal schemes. But of course, if you are trying to invest in short term, then I would not suggest you to wait for 15 years, right, to get your returns. I would ask you to go then do intraday trading, then to go for your pick up your commodities, your stocks, and just trade them and liquidate them on a very early basis, or do a very small FD of sort, or very small return mutual fund. So that depends. If you are risk taking, I would, if you have a lot of risk and you can add value to that risk, startups is something that I would recommend to you, right? Because the kind of returns startups would give you, of course, there's high risk, but the kind of returns they would give you is over and above stocks as well, most of the times. So, yeah, that depends. But as a business owner, what I definitely want to see in India, and it came as a biased perspective, that startups as an asset class is something which is unexplored, which a lot of people haven't put thought to. And I would want the people actually put thought and start investing, right? Because we need more of angel investors to come in to put capital and to also add value. It's not just in stocks, you can't add value. You put money into a stock and then you're just done. You see where the price of the stock goes. You can't say you can't buy a stock of Reliance and go to Mukesh Ambani and say, sir, I will add value to Reliance. You can't do that. But if in startups, they give you that leverage to be the companies who are becoming the future Reliances or the future Tatas. It gives you that leverage that you can start investing in them at a very early stage and advise them to go in that direction. So that's why I suggest startups is something that you should actively invest on. And yeah, financial knowledge, financial literacy is still something which is not there in our country at the time. So you should try and learn more about investments, attend events, attend forums. And yeah, that's how you learn about the art of investing.
Yeah. So financial awareness is not yet more in India. So that's the reason. But still, due to COVID, people started penetrating little bit, getting little awareness about investment, mostly on stocks, real estate, and all those things. But one thing people think that investing in a startup required huge capital, good expertise behind, and a network. So that's the reason it's not yet that explored, because people with good expertise like you and other people who have good networks, expertise, and area in this, after having good experience, good awareness, I guess if they enter, that will be good. But as a starter, a business owner who just have a capital, a little basic capital, they can explore, as you told, on stock, share, and the posters and all those things. Yeah, that's good. So this is one question which is very straightforward, very simple. That is, I want to start a business. I have an idea. Can I get funding?
Again, that is something that Amit, I just told you about that. If you just have an idea, okay, then I guess you can't, right? Because just an idea does not give me any leverage or any conviction as an investor. If you have an idea and you have a business over it,
Mhm.
then okay, I'm ready to listen. What's your business? I'm ready to listen how you're leveraging technology. I'm ready to listen who are your customers and how are you capturing them. I'm ready to listen what are your unit economics. Are you moving towards a profitable business, or are you just doing a business for the sake of it? And of course, the last thing and the most important I would try to analyze is that, are you the one who can execute this? Do you have the mental stimulus? Do you have the capabilities? Do you have the stamina, the endurance to go through startup, because it's a very tough journey of doing any business, right? So do you have that mental stamina and stimulus to execute that, to understand the problem of your customers and to solve it in the best way you can? And that's where I would want to put capital in you, right? But if you just have an idea, this does not answer any of the questions that I just asked. So yes, on just an idea, I would not even listen to you, probably even try to move you towards spam so that you don't spam me with the next ideas. But if you have a business over it, I'll always keep you in my inbox and I'll always maintain an active thread to understand in which direction you are moving your business ahead.
Yeah. Why I ask this separately, because I want to make this separate snippet and boost this to know people what exactly you have this question. I'll just directly share this. That's it. It will be easier. So getting an
Definitely.
answer directly from the expert, it will be more valuable than me. So yeah, how does an investor validate the idea?
Again, there are various methods of validation of an idea. Okay.
The common basic few validation.
Yeah, of course, of course. It's idea, of course, is there, in how you're executing that. That idea is also something that we validate, right? That is your execution right for that idea. So the best form of validation is sales, right? The revenue that you are generating, because that shows that customer are liking your products and they are paying for it, right? So that's the best form of idea validation in any business. Your idea is very good. Your idea is very solid, unique, and different. But are customers paying for it? Are you getting the revenue towards it? Even if, let's say, you're not getting the revenue towards it, do you have a plan to get revenue? And how much revenue do you estimate to get in that? So that's the first form of validation. Let's say if you're building a technology, right? If you're building something which is like an app, right? Which is there to sort of educate the customers and help them or to learn about something. Then of course you look at technology-based metrics, that how much time people are spending on your app, or let's say how much time they're coming again, or are they buying anything? Are they doing any in-app purchase from your app as well, right? And how many are active users on a monthly basis, on a daily basis, on a weekly basis, right? So this is all what we look at in terms of metricizing what's the app all about. But at the end of the day, the revenue part has to be there, right? How will you charge your customers? At what point of time you will charge your customers? And how much value do you think you can derive from that? If you know the answers to these three questions, does not mean that you have to answer it right now if you're not doing it. But if you're doing it, let's say even after 3-4 months, you need to have a solid plan backing all of this, right?
Yeah.
Because investors, when they're investing, as I said, they're not investing right now. They're looking at you. When I'm looking at Amit, I'm looking not at investing in him right now. Today, Amit is fantastic. Will Amit be fantastic in 3 years, in the next 3 years also? If the answer to it is yes, that's only when I put capital. If the answer to it is no, that no, Amit might face some problems or might back down when problem hits him 1.5 years later, that's when the investment goes wrong. So we have to invest looking at the whole broad picture for 3 to 5 years. So yeah, that's the kind of validation we do.
Yeah. Getting. Nice. So like this is the last question of this episode. The top three factors an investor will look into before investing in the company. So this is somewhere similar, like validation, but kind of different approach. You just need top three factors. Like
So generally, I say in investing, there are 5 T's of investing, right? So there is team, there is technology, there is traction, there is target market, and there is 10x potential. But since you asked me for three, I pick my best three from it.
yeah,
So my first very important T is called team, right? Wherein I'm looking at, again, answering these questions. Is that the right person to execute that idea? Or is that the right person who understands this idea as well, who understands the nuances and the intricacies of this idea? The problem that he's solving, has he faced that problem personally as well? Right. So looking at all the broad pictures, and because everything changes at the end of the day, right? But the team who's executing the idea on the ground, they don't change. They have that same conviction and passion, and they should always have that same. That is, team is the first and the most important factor we look at, and that's the only factor where we can assess something, because traction, technology, everything is very early, right? Very early days. So we don't have a full final picture of it. Technology changes, it evolves over time. Traction, of course, as the business grows, performance increases, it evolves over time. Team is the only thing where we have a solid base to reference something. The second thing I look at is called traction, of course. Traction in terms of the performance. What's the sales performance? What's the average time? Again, answering those same questions, that what's the average revenue realization any customer is giving you, how much cost you are spending to acquire one customer. So answering all of that questions in brief is what we look at broadly. The third thing, the most important T, is called 10x potential. The reason I've kept it over technology, which was, by the way, my third most important T, but the reason I've kept here above technology is 10x potential. What it means is that right now, if I'm investing in a company which is a value of 10 rupees, within the next 3 years, can it move from a value of 10 rupees to a value of 100 rupees? Right? Because if it's not moving towards a value of 100 rupees, I, as an investor, is not making my returns. I'm stuck at 10 rupees. I can't make something out of that 100, right? So that company, in a sense, has to have that 10x potential, so that if I put money, it grows 10 times bigger than what it is right now. So that potential has to be there, and that potential can be in terms of anything. That they are they building the right technology for that scale? Do they have that plan for scaling? Can they bear all of that scale? Let's say you, as a founder, are good with 500 customers, but let's say if 5,000 customers come to you the next day, are you still good with them? That's what I have to look at for as well, right? So 10x potential, in terms of potential with everything, is the business ready to grow 10x or not? That's the most important answer I'm looking at. Okay, so these are the three most important T's we look at. Okay, one is called team, of course. Second is called your traction, and the third is called 10x potential.
100%. Yeah. Got it, Aditya. It was informative. These questions are yet common, basic, but important. I feel like simple questions are quite important, and yet people need to be get awareness every time, because these are why basic is because these are fundamentals. If these things are to be known, then slowly, so based on this, they can build their grounding and they can build their pillars and all those things. So
Absolutely.
yeah, Aditya, thank you so much for your valuable time, taking out time and giving so valuable inputs. So hope so these questions did not bore you, because you do a lot of interviews, but yeah, that's the thing.
Absolutely. These are very thought provoking questions, and I hope the audience really listens to
Exactly.
them. And whoever wants to connect, of course, we can definitely connect post the session as well. I'm sure Amit would put in all the links, relevant links there. And yes, happy chatting with you, Amit. Finally, we did this.
Yes, finally.
and,
Did. And
and
yeah, and I will surely give your website and social handles below in the description in podcast also, as well as on YouTube and Instagram as well. You can follow him. You can check out his content. You'll get awareness as well as connections, build connections, know everything about him. And yeah, guys, that's it from my side. See you in the another one. Until then, take care, keep smiling. Bye bye from me and from Aditya.